Hey, Tim.
Hello.
Hey, buddy. Huge honor having you here.
Really
And
honored
thank you
to
for
have
doing
you
this.
here. Give me just 1 second and I'll get going. I just want to make sure everything's up and running this time and everyone can hear me.
Awesome.
So, yeah, I'm just going to run down questions again from the start and we'll get going here. First question was, did I have any issues in scaling my strategy? And mainly with OTCs I did. Just because I kept on getting more and more aggressive with the size I wanted to take on OTCs. And the problem is that the OTC market, especially now, is not very liquid. So there really is a limit kind of built in where you really, if you go way too big, given the volume that the stock is trading, you put yourself in great risk of getting stuck, especially if the stock starts going against you. And then there's just nothing you can do to get out. So the one thing I can do that kind of helps offset that risk a little bit is I love using the route ARCA with whatever broker I might be making the trade with, because ARCA, it just seems like gives me a lot more efficient of executions. That is the one route that is pretty much instant in the OTC market rather than your order getting caught and held. But there are still times where you'll throw that ARCA order in to sell and there's just no buyers there to take your order. So it can help. I love direct routing to ARCA, but it's not like a foolproof situation. It's not like, oh, well, since I have access to this route, I can trade whatever size I want. It all really depends on the volume the stock is trading. Something like TMPS here, it only traded a couple million shares today. But it's way up from what it was doing before. So this is definitely liquid enough to be trading, but I can't just throw a couple 100,000 shares in something like this and hope for the best, because I would be so stuck. Do I always use limit orders with picking my exact route, the ECNs, or do I just do smart routing? Is it important for day traders to get some rebate fees? So I don't think fees are that important to pay attention to. A lot of the times the stocks I'm trading are in the $1 to $5 range. And so, I mean, you're talking about a few tenths of a cent per share for routing. So at that point, it doesn't really matter that much. It's pennies on the dollar. I'd much rather just be aggressive, take liquidity, get my fills, and get all the size I want. But if you're talking about something really cheap like DCTH, well, then if you're getting dinged for fees, those can add up in a real hurry. So when the stock is probably under 20 cents or so, then I start thinking about it. Then I start being really careful. Brokers like E-Trade, their smart routing for listed stocks especially, I think does a really good job. And there's no routing fees with that. It's just the $4.95 per trade flat rate. But I have had issues in the past with brokers like Fidelity, where I try their smart route and there is a noticeable decline in the execution quality, where maybe I've had times with Fidelity in the past. I'm not with them anymore, but like I've seen it where like maybe there's a 100,000 share bidder sitting there, and I try to sell 100,000 shares into them, and the order just sits there and doesn't do a thing. And maybe I fill a quarter of it, and then someone else takes out the big bid, and I get really upset because what the hell, my order was just sitting there. Why didn't it fill? So it kind of depends on who your broker is and how well you see their smart routes doing for you. But in general, I don't mind routing directly to ECNs. I like using ARCA. I like using EdgeX. And I don't mind the few tenths of a cent per share for better fills. With OTC pumps dying and being almost dead for quite some time, am I focusing mostly on fundamental research and trying to short the easy faders? And is first red day still one of my main strategies? Yeah, I did. Back in 2014 is when I started to shift over to listed stocks from OTCs, and I've traded those a lot more ever since. Just because the opportunity hasn't been quite the same in OTC land, although this past year, the past 6 months at least, we've had quite a bit of opportunity with some of the marijuana stocks. Again, those have gotten very active. But I do I do focus on fundamentals a bit more than I used to, especially with listed stocks. With OTCs, I kind of still just take the approach of assuming they're all garbage. But with the listed stocks and the fundamentals, I don't focus quite as much on it as I would have a few months ago, just because I found that I would have had to be a little bit wider of a time frame trader for them to really make a difference to my profit and loss, where I'd really need to be shorting something and holding it for weeks. And that's just not me. That's just not, it doesn't comply with my personality. But I will say this, I do like to have a basic idea of some fundamental things, such as whether the company can easily dilute to you or not. How many shares do they have to dump? Dries and tops are probably a couple of the most ridiculous examples of this, where they have these ridiculous deals in place where they can basically just create millions of dollars worth of stock out of thin air. And as a result, the stock just gets pummeled and then reverse splits and then gets pummeled again. And they just keep doing it over and over and over again until they eventually get delisted. Just to have the basic idea of fundamentals and how to look something like that up and, find that deals like that are in place, even if you don't short sell or aren't comfortable with it, it can save you from buying something that will just dilute you to death. And the one more question here was, do I get stuck in fundamental-based swings that aren't working? And how much time would I give the trade before stopping out? And I really don't let myself get too stuck anymore. I would never use fundamentals as a reason to justify continuing to hold when the trade is going against you, because what I've seen over the years now is that front side of the move, anything is possible. You get some absolutely ridiculous short squeezes out there where the stock just does something well beyond what you thought possible. DCTH we could even use as an example of this, because even last week when it was trading down 5, 6, 7, 8 cents, I was shorting this a little last week. Because this thing probably belongs down at a penny or lower, just based on the fundamental situation of that and the way they're diluting. But I shorted something like 500,000 to 1 million shares of this at one point last week, and I was looking to fade it back towards maybe 3 cents, 2 cents, something like that. I just thought it would totally fall apart, and it wasn't working, and it didn't really stop me out. I didn't really. I think I took it off for break even, but point is, it held up. It didn't break down. I had to take it off, and thank God I did, because if I'd been short that kind of size going into a big squeeze into the 30s, it would have been an absolutely massive loss. And there may have been a time in the past where I would do something crazy and stubborn like that, but I've taken my fair share of losses like that. I lost $290,000. That's my worst loss ever on LAKE back in October 2014. And I've taken several other losses in the neighborhood of $100,000 or more. So you take enough losses like that, and that's eventually going to teach you, you've got to respect the market. You've got to respect the trend. And the trend matters far more than fundamentals do. Once that trend changes and you're on the backside of the move, then, have at it. But as long as it's still going up, you have to realize that it can go up a lot further than you can take, and it could blow up your account. This question is basically asking, how did I prepare myself for a lifestyle change from 4 figures to 7 figures plus? Did I lose some friends along the way? Not so much the naysayers, but more like people I love. And, I've been fortunate. I have great friends, great family. I haven't had any kind of relationship blowups or anything like that. Everyone's been really cool, really supportive. Part of it, though, is that, outside of the trading world where you kind of, post about your successes and failures and profit and loss on Twitter and stuff, and that kind of builds credibility in this industry. Outside of the trading world, I don't like talking money. I'm very private about it. I get kind of uncomfortable when people talk to me about it. So we don't deal with it too much. So, and it's been a really good policy to just kind of leave it all unspoken. And I'm not a big splurger, so it's not like I'm buying all these fancy toys and showing them off and making people jealous or anything like that. So, I'm happy with how it's all gone so far, and I just will never be in anyone's face over it. What really helped me after wiping out my account to become a consistently profitable trader Yeah, so the story there is that my first $1,500 I lost. I basically blew it all up. I was over trading. I was going nuts. I was just trying to make money on everything. But it took about 6 months for that to happen. So the biggest thing I gained through that 6 months of experience was I tracked all my trades. I could see my history. I could see where I succeeded. I could see where I failed. And I kind of gained the experience to get the idea of like, okay, I'm a little more comfortable with this setup versus this setup. So I think the biggest thing that helped me was when I came back and focused up. I just cut down to only playing one or two setups, and they were the setups I was the very best at. One of those setups actually was OTC multi-day breakouts, which we saw on TMPS today on the break past 50. I scalped that long on the 50 break and sold it pretty quickly, and I bought a little bit again before the close, just because I think it could gap up and spike on Monday. So, I mean, that's still one of my bread and butter setups, but that doesn't mean it will be for you. You need to figure out what works for you. You kind of need to have that trial by fire a little bit of seeing where you succeed and where you fail. And then once you have had some experience with that, I think the best piece of advice I can give you is to just really have the discipline. Only trade what you're good at for a while. Cut out everything else. Don't worry about missing the occasional big trade. That is not important. What's important is that you're consistent, that you slowly grow your account, and build confidence, and then you can always start slowly branching out from there. I've heard several traders say adaptation is an expected part of being a trader. The market changes and traders adapt. At the same time, they claim it has become more difficult now than in the past for retail traders to make money in the markets. How do I see AI and other technological advancements impacting the future of day traders? I mean, I would think that probably the smarter AI gets, the harder it's going to be for us. But that being said, I don't think that it feels any harder for me to profit today than it did 2 or 3 years ago. I mean, yes, some setups have stopped working. I mean, new promo buys pretty much doesn't exist for me anymore. And that was one of my biggest setups when I first started. When we had those major promoters who would announce a pick and there'd be a huge rush of volume and the stock would spike 100% in 20 minutes. I mean, I loved those, and it was very easy to get fills. They were very liquid, and now there's nobody who can do that. So yeah, I mean, I lost that one setup, and there was that period of time where OTCs dried up, and things, just got really slow in OTC land for me. So I had to adapt. I had to move over to NASDAQ. So I had to kind of slowly learn that. But the important thing is that I kind of took my time with it, and I didn't just dive in head first, playing huge size and get myself into crazy trouble. Although I guess you could argue that I kind of did that a few months later. I don't like worrying about the future. I like focusing on what's working now, what I'm good at now, and as long as it lasts, I'm going to enjoy it. And as I start to actually notice things changing, then I'll start maybe looking for another edge or another angle I can exploit. Trading tickers is a must-have, must-watch DVD. Thank you very much. I appreciate that. It was made in 2015. We all know that the markets change. If I made a trading tickers 2, would I add any strategies to my existing strategies? And which one of my existing strategies do I use the most now? Okay, so I guess the first part of that question, would I add any setups now? Not really. I guess chapter 9, which was shorting the front side of the move, shorting lower highs on parabolic spikes. I kind of concluded that chapter by saying that I wasn't trading that strategy anymore because I couldn't be disciplined enough. At the time, I was having some real issues cutting losses, and I kept taking big losses as a result. But now that I have that a lot more under control, that's back on the table. I'm definitely back to shorting lower highs on green days. And, it's still maybe not the best odds of success trade, but it's really good risk reward if I respect my stops. Other than that, though, there hasn't been a whole lot of changes to my strategies in terms of things I'd add. I'd say maybe I get a little more patient on the backside of some of these shorts, where I'll swing them for a day or two now. But I really don't go much beyond that. As far as strategies that don't work too much anymore, like I said, new promo releases, that is not a very effective strategy right now. There's just nobody that can create that kind of volume. So chapter 5, I mean, it's good to know, but it's not, you can't really put it into practice in today's market. And listed stock breakouts, you know, they're still kind of hit or miss. I haven't seen one work great on a multi-day basis for a while. I mean, I guess DCTH was a breakout past 084, but that might be the first one I can think of. I mean, if I'm trying to think of a stock over $1, you know, you can say things like MTBC and Mosey both had nice multi-day breakouts, but those were pretty quick spikes where the move only lasted an hour or two before they started to fade back off again. So I would say I still play NASDAQ multi-day breakouts, but I'm less patient with them than I would have been in the DVD, where I would probably hold it all day and then swing to the next day. Which strategies do I use the most now? Buying OTC breakouts, that's still a big one for me. And I'd say overextended gap downs is another really big one for me. Those are still probably my favorite two. And I think I probably would have answered that question the same way back when I made the DVD. I think those were my favorite two back then also. Do I still keep an Excel spreadsheet with the stats on my recent biggest winners and losers? Yeah, I do still track that. I have my top 5 gains, my top 5 losses, and best week, best months, worst months. I don't know if that really helps me all that much grow as a trader, although it is nice to kind of hold myself accountable for the big losses and make sure that I'm getting those more under control. And I was really good about the big losses up until the last 3 months of 2015 and then or 2016, and then I started to slip up a bit. This year so far, I've been really good again. My worst of the year so far is 25K, which, you know, sounds like a lot, but compared to last year, it's much better. I'm just gonna try to keep at it this year and not slip up towards the end of the year. I'm not gonna let myself relax mentally like I did last time. You understand the OTC market was very lucrative back then, but what did I learn about OTCs at that time that made me primarily trade that market? I really just thought they were more predictable. They were so manipulated. They really didn't tie into what the overall market was doing very much. I mean, you could have a day where the Dow and SPY were down and whatever pump you were playing was still going to the moon. And between the fact that it was more liquid and it was just the patterns were so predictable and it traded so purely based off of technicals alone, it just made it very easy for me to trade. I loved the simplicity of the patterns, especially on the short side, where you get the crazy extensions on stuff like ZPAS, and then just absolute death in a couple days' time. So, I mean, and you still get some of these in the OTC market. It's not as much as it used to be, but over the last 6 months, I mean, there was definitely a bit of a resurgence with the marijuana stocks also. Like, we saw a lot of marijuana stocks do some pretty crazy moves with some really tradable volume. So I always keep my eye on the OTC market, even when we go through those periods of time where things are pretty quiet. I'm always watching, because whenever the patterns start to develop and we start to either get multi-day breakouts or crazy overextension, you know, the ones like TMPS, like I'm gonna short the hell out of this next week probably. It's just a question of how high does it go first. So I'm always watching and I'm always ready. And I still would rather trade OTCs over NASDAQs any day, I think, just because I think the patterns work so much more cleanly and the moves are so much more volatile and violent. If newsletter pump and dumps weren't a thing when I started, what do I think would have been the best strategy to grow my account? Still OTC multi-day breakouts. I would have been just purely focused on that. I don't know if I would have been short selling so much at the time, just because of the 250 rule and not having a huge balance in my account. Although now, I guess if I did have like a small account at, I don't know, like maybe SureTrader or somewhere like that, I think they still have somewhat decent borrows there. Although I haven't been with them for years, so I can't say that with confidence. But I might also look into the occasional overextended gap down short or something like that if I were even able to get a locate. But I think there would have been a lot of frustration with a broker like SureTrader trying to get locates. So I would have been focused on the longs. I would have worked on the OTC multi-day breakouts first still. And I mean, in today's market, the way we've seen some of these low floats going crazy, I'd still be playing listed stock breakouts, but like I just said, probably on a little bit shorter of a time frame. And I really would like to eventually develop some kind of strategy to figure out some of these low float gap ups, which ones are the big spikers versus the ones that just eat crap out of the gate. But I'm terrible at buying. I'm terrible at staying comfortable. So that's an area that would require a lot of work and a lot of tracking before I could figure out some kind of angle and edge that I could take advantage of. What's the best way to recover from burning out while studying after about 4 months of studying? You've hit a point where you feel a little unmotivated. Do I have some advice so you can get back to normal and start studying efficiently again? I mean, anytime I start to feel burned out with trading, I think it's important just to kind of allow yourself some time off. In the past for me, it's always kind of time off. I've always kind of associated with something negative because it's always had to happen after I take a big loss, where I make a huge mistake and then I say, oh my gosh, I've got to step away for a while. So I would say, if you've been going for a while and you're feeling unmotivated and a bit burned out, don't feel like you're doing something wrong. Don't make it feel like a negative thing that you might take a little time off to just relax. I mean, give yourself a few days, give yourself a week, but just let yourself refresh mentally and kind of absorb a little bit of what you've learned and what you've gone through since you started. There's absolutely nothing wrong with that. So don't beat yourself up over it, and just give yourself a chance to refresh. What's my criteria for jumping into an overextended position? What methods do I use to limit risk on these fast-moving momentum plays? I mean, I guess I say that I like it to be up at least 50%, but honestly, it's a lot more about feel than anything for me. I don't like the more expensive overextended stocks like OMER, where it got up there, like 8 days in a row of green days, but each day it's only moving about $1 or $2 a share. If this is an OTC, I expect a big bloody candle back down towards maybe $16. But on the NASDAQs like this, they're going to be really slow, choppy faders and really tricky. So I hate ones like this, even though they were up 50%. So I mean, something like DCTH, I was shorting DCTH a lot this week. And I loved this because it was huge run. It was really fast, just a couple days, really big volatile candles, and great volume. That's the other thing. I don't short overextended gap downs if it was really a liquid on the way up, because a lot of times what you see is when you get on the backside of the move, volume drops. So if it was a liquid on the way up and in the first place, it's going to be even worse on the way down. And I don't like it when a stock doesn't have liquidity, because I think it makes it a lot less predictable. And how do I limit my risk? I mean, I know my stop loss. I know that pretty much before I ever even enter a trade, whether I'm risking red, green, whether I'm risking high a day. I have my risk and I stick to it. And I just size in accordingly. And now that I'm trading larger size, what's my approach to managing positions? Do I ever scale in and out? Yeah, I definitely will scale in and out sometimes. More out than in. I don't like scaling in, because what I find I do a lot when I'm trying to scale in is it seems like I only get good size if the stock is going against me a little. And I don't like that being the case. I don't like it where I get my starter position and then the stock suddenly falls apart and goes in the direction I want and I only have a starter. So I like to be more aggressive with my entries, try to take most, if not all of it at once. But then on the way out, I will pay myself pieces along the way. And that just makes it easier to get out of the trade, once it seems like trend is starting to reverse. If I'm being stopped out of the trade though, I'm just slamming out. I'm not going to scale out of that. I'm just getting the heck out of there because I don't want to be stubborn even with half of my position. And do I have favorite indicators to use, day trading versus swing trading? I really don't. I don't use many indicators, and they're not different based on one versus the other. It's always just basic support resistance and then VWAP for me. That's it. That's all I look at. VWAP is short for value weighted average price, and it doesn't even play that huge of a role in my trading. I just kind of use it more as a guideline. Okay, when I'm checking stocks and I'm checking the chart history and I find something which fits one of my patterns, the stock details like market cap or float or whether or not it's an earnings winner, does that matter to me or just the chart history? Primarily the chart history, but I do care about the float or shares outstanding, I guess, because sometimes that's just easier to see than what the float is. But that matters to me because the fewer number of shares outstanding, the easier it is for the stock to squeeze, the crazier of a ramp you might get. I mean, if you all remember back in November when Dries went from something like $5 to $100 in a matter of days, I mean, that was because its float was under 1 million shares. That would never, ever happen with a 20 million float stock or something like that. And I didn't respect it very well, and I got stubborn, and I took a couple losses that were pretty large on it as a result. So, I mean, almost any trade, if I can see that it's got a really, really low float, that's one of the first things I'll look at, and I'll say like, okay, I might want to be a little more careful in short selling this, or I might want to wait until first red day on this rather than being aggressive and trying to attack green days. But what the catalyst is, whether it's an earnings winner or not, I've never put a lot of weight into that. I know some people will say like, oh, never short earnings winners, but I don't really respect that rule. I just, I go mostly off of the pattern, but I think that the float is something that will kind of influence how the pattern plays out. So that's why you need to pay attention to float. What changed when everything clicked and I became consistently profitable? What was my aha moment? I kind of mentioned this earlier, but the aha moment for me was when I realized that I was over trading, that I was trying to do too much. I was trying to learn like 8 setups at a time, and that was just way too much. So I just focused down. I figured out my favorite 1 or 2, and I just stuck to it. Realizing it was okay to miss other plays. That was the aha moment. I just want to stick to my niche and where I'm good. When do I decide to wire out after huge profits, or is it more of a monthly habit for me? Do I feel like wiring out is important for a trader's mental and emotional state? It's something I've never thought much about, to be honest. I've done it maybe a couple times a year up till this point, and there hasn't been any real rhyme or reason other than like maybe most of my money's in my trading accounts and not bank accounts, and I need to pay tax estimates like that. I haven't pulled any yet this year. The only time I think it would really become important for like a mental or emotional state is if you felt like you weren't good at cutting losses and you were worried like what happens if this trade comes along that blows up my accounts. Well, at that point, you'd probably only want to have about 1/5 of your money in there compared to all of it. And it's something I probably should do. I probably should wire some out and get them back down a little bit because it's been a pretty good year up to this point. But yeah, I wish I could give you more of a in-depth answer about this, but just to be honest, I've never thought a lot about it. What tickers were mainly responsible for my gains this week? It would have been DCTH this week. I traded it. I mean, this was pretty much all I traded this week, aside from a couple other little trades I tried that didn't work out for the most part. But DCTH, for all the good things I did with it, I did just as many bad things. I mean, I bought the breakout on this thing on last Friday. I was holding it overnight, 450,000 shares or so from the nines, and I sold it in the 11s on Monday or Tuesday, whatever day this was. I can't keep my days straight here. Okay, this was Monday, this was Tuesday. So yeah, Tuesday. I sold it way early on Tuesday and then watched most of that crazy squeeze happen without me. Beat myself up short a little bit on Wednesday on this before I finally nailed the short into the close on it, and then got a big short on it yesterday, where I started in pre-market, added into the morning spikes, but then I didn't cover any into the flush down to 18 and wound up having to cover most of it up in the 22, 23 area, just because I was trying to be patient with it all day and it just did not fall apart like I wanted. And then today, of course, it melted off a lot more, but because of the overnight 250 rule, I couldn't hold the kind of size I had overnight. It just wouldn't have been allowed by my broker. So this is one where when I had this big reversal candle here, I would have normally shorted and swung it if it was a more expensive stock, but I had to kind of take it on a day by day approach. And I was pretty happy with how I did on Wednesday and Thursday with it. Just lots of big shorts that I tried to cover into fading action or be kind of patient with. But today I didn't do a great job with it. I had a short near open again today, but I kind of got scared out and just never had quite the same level of conviction that I did the past couple of days when it was still a higher price. Any tips on how to avoid forcing trades during the slower summer months? I mean, I think that experience has just taught me that when I force trades, I lose. And after a while, I get tired of that. So, I mean, I don't know if I have any advice other really than that. Just be more afraid of losing than of going a day without making a trade. If you're trying to really work on being consistent and focusing in on the couple of things you do best, my advice is just don't be afraid to not trade a day. Make the setup be there, make it be perfect. What were the main differences I had to make in my trading strategy when I switched from OTC to listed stocks is the basic gist of this question. And there were a lot of similarities in the setups. The fact that I was looking mainly at big parabolic charts and then I wanted to short sell them. The biggest difference was I had to learn a little more patience because listed stocks do not come down nearly as fast as OTC stocks. They're a lot choppier. I mean, DCTH, perfect example. This took 3 days to get from the 30s back down to the 10-cent area. I mean, if this was an OTC, this would have happened in probably an hour. So that's the biggest thing is I've just had to learn to be a little more patient and deal with a lot more choppiness and not let myself get too wound up or antsy or scared out during that choppiness. And you've noticed some good traders beginning to put a lot more weight into fundamental analysis. Do I also see the edge? Or am I still mainly technical analysis? Kind of answered that already. Like I said, I think that the main edge for fundamental analysis would be if you're a longer term swing trader, but there still are some huge things to be gained from it if you can look at things such as basically any offerings the company does, any details that exist about ways they can dump stock on people and create new shares and dilute. That's the biggest edge I see. Some of the things I'm on the hunt for when examining SEC filings. I like to see if the company needs money. That is usually just looking at cash versus their current liabilities. I look at their quarterly results, if they had a net profit or net loss, and most of the time with a lot of these cheap companies, they lose money quarter after quarter after quarter. So the only way they can stay in business and keep on continuing to exist is by raising funds through offerings and diluting. I also like looking just at the details of offerings. Do they have warrants out there? Do they do an at-the-market offering? And those are usually in the form 424Bs. That's usually where you'll find details on offerings. What am I trying to accomplish next in trading? What big milestone am I working towards? I guess that's funny. I don't have a lot of goals going forward in terms of milestones or anything like that. I guess dollar profits, the next big milestone will be 5 million. But I just want to continue to see improvement with myself. That's really the main thing. Month to month. Not necessarily that I want to make more money month to month, but I want to see myself doing things better. I want to see myself making better decisions, getting stubborn less often, and maybe sizing up a little bit, slowly increasing how much money I'm willing to put on the line or how much I'm willing to risk on any given trade. So I guess just like little baby steps so that, things overall could become more profitable. But it's all very much like a inward reflection process where I need to just see week to week, month to month, what am I doing well, what am I doing poorly? And I just want to see myself improve. That really is the big thing. And another well-known trader recently described knowing the story around a stock or a trade. Do I follow the story or ongoing saga around a stock? And if so, how much weight do I give that when I'm considering my trade? With OTCs, I give no weight to the story. I assume they're all junk, especially pump and dumps. With listed stocks, I don't even really follow the story too closely there. I just, if something pops up on my scanner, I just dive into the latest 10Q and just do a little digging and see if anything shows up that seems like a red flag, such as, offerings they might have out there. What do I wish I would have learned earlier about trading? I would say, whoops. Let me get that out of there. I think the importance of, just being okay to say I'm wrong and get out of a trade. I was really good about that when I first started, I guess, but because I was so afraid of taking a big loss. But then as my confidence grew, as my ego grew a bit even, it became harder and harder for me to admit I was wrong, and I started taking more and more large losses. And it's just not worth it. It's not worth it financially. It's not worth it emotionally. I wish that I had accepted that everybody loses sometimes. Sometimes good setups just don't work. And you've just got to get out when that happens. When I started trading, did I do it part or full time? I was part time for the first 7 months or so because I was still in college. So, I think it was like May of 2011. I was in school. June, July, August, I was working a summer job, and I could barely trade June, July, August. Trying to trade from State Farm was hell. That was almost impossible. And then September, October, November, December, I was back in school again, graduated in December, and then moved back home and started trading full time. What do I think about small account building under 5 to 10,000? If it was me, I'd be looking at breakouts mostly. That's just where I am most comfortable with small accounts. That's how I grew my small accounts, in addition to new promo buys. But unfortunately, again, those are donezo for now. But I think that, don't worry about what I would have done. Worry about what you're good at. Again, that is my number one piece of advice to anybody. Don't let anybody tell you what setups you should or shouldn't be playing. Follow your own results. Follow your own comfort. Everybody's going to be a little different. And do I only use the VWAP indicator? Yep, that's the only one, aside from basic support and resistance. This question is saying that they got a bit of a psychological weakness where when the market opens in the morning, they get kind of panicked and can't trade anything. How do you get over this fear? And I've had that plenty of times myself, especially back when I first started. It was almost a constant thing, where I would just kind of get paralyzed by fear in a situation where I had planned for this setup. I thought this was a good setup. I wanted to take action, but then I was so afraid of being wrong and taking a loss that I just froze. And the moment passed me by. And the best, I guess, what did I even do? I'm trying to remember. I know I just got over it with time. Time was the main factor. Seeing myself be right enough times more than I was wrong. That was a huge help. Just, at a certain point, you say like, okay, like I've watched it happen enough. This time I've got to click. Now it could help to make yourself trade really small size for a while. Just get yourself used to pushing those buttons. An amount of money where you don't care if things go wrong. You don't care if you lose. That might be the way to go. You just got to kind of develop the habit of pushing those buttons and taking that risk, and then slowly size up the more and more comfortable you get. Do I still short front side? What do I think about trying to top tick parabolics? Yeah, now I'm back to shorting front side because I'm better about cutting losses. I'm not so worried about getting stubborn anymore and getting smoked. But I don't really try to top tick something. I'm not going to just be taking random stabs as it's still doing green candle after green candle. What I'm going to wait for is the first hard crack, and then once there's a rebound, I'm going to short into that rebound, looking for it to be a lower high, with high of day as my risk. Coins look very similar to OTC. Did I try trading coins? I have not tried trading coins yet. I haven't really looked into it too much, to be honest, but I've been reading some Coinbase horror stories this past week, and it sounds like, I don't know if this is most of the platforms or just Coinbase, how like anytime there's a panic, like it gets locked up and people can't even log in to sell or do anything. But if I can't find a way around that, I have absolutely no interest. I don't want to have issues getting to my funds and getting out of something when I need to. And this looks like the last one. Once I'm in a trade, how do I manage my position? Do I average up or down, set stops, etc.? So my number one rule, or my new number one rule, that I put into force back in November 2015, would it have been, I think? Like I kind of reached this breaking point where I was like, I'm so sick of taking big losses. This is getting ridiculous. And so I put this rule into place saying that if the stock is outside of my plan, so, I go into the trade, I know my stop loss, I know where I need to get out if the trade's not working. Now, let's say my stop loss comes and goes and I'm still in the trade. I didn't stop out like I'm supposed to. I am not allowed to add. That is like the golden rule. I am not allowed to add outside of my plan and try to turn a loser into a winner, because that was the one thing all of my catastrophic trades have in common, is I start sizing up and adding to this loser, trying to make things work. So I do still add sometimes, though, when the trade is within my plan and I'm down a little bit. That's acceptable if my stop loss hasn't hit yet. The other situation would be there are definitely trades where, maybe I'm shorting a really extended chart that's having its first red day and I got a bunch short at the open and it's going in my favor. I'll short more into the first bounce, or I'll add to a winner along the way. I only do this a little bit. I know some guys will add to a winner, and props to them for being able to do it. But psychologically, it's still a really hard thing for me to do. So usually I've got about one add in me when it comes to adding to a winner, and then after that I'm about done, and I'm like, okay, I'm just gonna ride it now, and hopefully it keeps working. And as far as setting stops goes, I try not to set hard stops. I just am paranoid about that being in there and market makers being able to see it. If I'm bad about stopping out for like a week or two and I'm not cutting losses like I should, then I force myself to use hard stops. But in general, I like to do it myself. I like to just push that button myself, make myself take the loss, and I'm just more comfortable that way. Okay, well, that is the end of the questions. So thank you guys all for tuning in. Sorry again about that little mix-up at the beginning. That was, you know, kind of embarrassing that I was just talking to
all good, Tim.
But glad you all stuck around and really appreciate it. Hope you guys could take something away from this. Thanks all.
Thank you, Tim. Thanks very much.
Tim. Well, that was awesome.
Yeah, that was awesome. Thank you very much. But I hope you guys learned something here. We got the questions answered. Thanks for him taking the time to answer our questions here.
Yeah, huge props to Tim for doing this and coming out. I mean, that's huge. Yeah, unbelievable.
All right,
thank
you. Thank you, everybody, for being here. That was awesome. Thanks for participating with your questions.